Starting off with the dollar index, it went according to script. I was talking about one more high Monday. Here we were, we got this pullback. I said I didn't think it was complete yet. I thought we could go possibly as high as par 30 to 50. We almost got there, par 33. We are diverging. And you'll see in a couple of minutes, when I go to the individual instruments, like the euro, that I had a third drive line that it came off to right to the pit before the reversal today. Also wanted you to keep in mind that 1 hour or 4 hour candle does not a trend make. Even 1 day does not a trend make. But you should not be short the dollar anymore. We're getting these divergences. I talked about targets in the euro down to 105.80, 105.60. We bounced off of that. Is that going to be the low, final low? Only Nostradamus knows, but my charts tell me this is what could have happened. That is now manifesting on my screen. So, you know, there's still a lot of people looking for at least 102.5 in the Dixie. I'm saying that this is starting to look like here's drive 1, here's drive 2, and this could be drive 3, where we have 2 of 3, where we could pull back and still extend into this par 30, par 50 range. But it's ripe for a correction right now. I'm looking for a peak within the next 72 hours. It could have been today. I'm trying not to make too much out of today because it is a pre-holiday session. And then I'm looking for a pretty good pullback that could take us back down to the 97 level, which was an important level it got through. That could take the euro back to 108, possibly 110 in the weeks ahead. So we are completing something here. I've been on top of it the last several weeks talking about these targets. We're now there. Give me a Y if you're with me on my analysis of the Dixie and how you see the forecast has been manifesting in front of your eyes. Give me a Y. Okay, so risk on. While we're looking at the dollar making new highs, USD CAD is quite a way off the highs. US dollar yen is quite a way off last week's spike high that was also forecasted on the stop hunt over 360. S&P's really, it's been a pretty quiet, narrow range week. I could see it either pushing up one more time to complete and make a new high or test 2120, or we could just roll over here back under 2020 of 110 point decline in the S&Ps. If we break 2020, I think we could be looking at 1920, 1940. Going into Christmas. Perhaps it's not going to be a Santa Claus rally. We already had our Santa Claus rally. So just like I'm looking for a pullback in the dollar, I'm also looking for a pullback in the S&Ps. That should be negative on US dollar yen, negative the dollar, etc., etc. Give me a Y if you're with me on the S&Ps and the dollar. So the crude oil, we've had some bounces. In fact, it's starting to look like that may have been the peak in Canada when I was with you on Monday. Crude oil's trying to act a little better than the gold. Gold pressing the lows again, starting to get a little reversal again here in the crude oil market, down around this 39 level. So if the dollar weakens, we could at least look for a rebound back towards 43, 44 in the crude oil. I really want to get bearish. We could have something like this from down here or a fib extension of that, which tells me unless we just capitulate again one more time, that we should be looking for shorts in USD CAD if this is the, or at least a bottom in crude oil. Give me a Y if you're with me. So even though the dollar's making a new high, Aussie is well above the lows, Kiwi's well above the lows, so the commodity currencies are not confirming what's happening in the dollar. Let's take a quick look at the gold market here. Still believe that there's potential for that 1050 range, which would set up a pullback to buy in Aussie USD. So gold doing nothing right yet. Still set up. I've been talking about 1050, 1040. Perhaps we're there next week with the dollar pushing up to make one more extension high in the coming days. which tells me if we're selling off, this could be a nice break to buy in the Aussie setting up, especially if I'm right about the dollar turning down in the next several trading sessions, because if the Aussie could not make new lows and was holding up well during a period of dollar strength, you have to ask yourself, what's it going to do during a period of dollar weakness? Give me a Y if you're with me. Okay, so let's take a look at treasuries, which is also a risk on, risk off instrument, which also relates to US dollar yen. We've had a little bit of a bounce here. I'm not completely convinced of this being a bottom, and it still could be flag-like, and we could still have one more washout here in the bond market, which if that happens, we'll have better levels to get short the yen. Possibly if we make new lows here, maybe even one more shot up towards 124 in the coming days and weeks into a Fed hike in December. Give me a Y if you're with me. Any questions on any of the outside markets, which include the dollar index? It got within 10 points of a projected top. Could still get there in the next several trading days. Best guess is next week when everyone comes back from holiday. Any questions on the gold, which I correlate with Aussie, or the oil, which I correlate with USD CAD, and the S&Ps with US dollar yen along with the treasury market? Any questions? Okay, great. Let's get to our individual instruments, and I want you guys to get your camera out. Are you ready? Here's the euro. So, I drew this line last week. What do you think of that line? Getting a pretty good pop in euro. Not quite a reversal day. I talked about looking for lows around 105.80 to 60. The low was 105.65. You have 80 pips made here. If you got short into my target zone, congratulations. You should have been booking it. I said I thought that the RSI would stay above 30. That's exactly what happened. And this line, and you could go back to past webinars, was drawn way before we got back down here. So that's how I came up with my target based upon a 3-drive line. I hope people are starting to appreciate the power behind the number of 3 and 3-drive formations tied in with my RSI work that looks for divergences in at least 2, which is what we had. Here was 1, and here was 2. Nothing wrong with taking 70, 80 pips if you bought that range early this morning before the reversal, because this is what I don't want everyone to get too pumped up about that we're going to have a dollar crash right now, because we could still do some work and maybe even retest this. You go to some shorter term time frames and you see we have 1 and we have 2 and we're back at resistance. We could trade back down here again. So what I'm saying is, although the forecast for a decline to that price and then a rebound from that price, although it was spot on, keep it in perspective, because we have a big rally in the euro, right? But look at the daily. We're about unchanged on the day. Really not quite a reversal day yet, right? Although we've made new lows and we have divergence on the dailies. And then on the weekly, we're about unchanged on the week. Let me just clean up some of this. So really still down on the week here. 629 last week. We closed at 47. So we're still down about 19 pips on the week. It's not quite a reversal week. So although I think that we have something here, I think there'll be other opportunities. Here's 1, 2, 3. So don't chase it, because it takes time in many instances in reversals and peaks and bottoms, for it's a process and it takes time to turn around a battleship. But this should be your warning. At the minimum, should no longer be trying to work the short side of Euro USD. Give me a Y if you're with me. So what can we expect as far as recovery in Euro USD? Very nice 4-hour candle, diverged as well. I think that we have potential to rally back towards the 108 level and possibly 110 in the weeks ahead. For starters, that there'll be stop hunts above today's high. Okay, stops above here, stops above here, 5 stops above here, and that potentially we're heading up initially the 107.80, 108 level. And why not a retrace back to the breakdown? The breakdown took place at about 110 and a half, 110.65, and then I have confluence at 110.50. So if they do take the dollar up again, I'm looking for recovery up to a 110 and a half level, which is going to be a fib retrace. Let's see what kind of confluence we have with fibs. We know we have moving average confluence. Let's see what kind of fib confluence we have. So let's take it from the high of the move up here, this 117 level, and just say we're very close to a low. So 38% back is a 109, 110 and a half. Your 50% retrace is going to take you up to 111. So we have confluence in here between the 38 and 50% retrace and the breakdown. So as you can see, it's not that I'm calling for a crash in the dollar, but you have to take it a step at a time. And the first step was identifying how low it could go. And we did that with our 3 drive formation. The second step is identifying divergence, potential divergence, which we also got. And now we're at this confluence line for today. So buying pullbacks in Euro, USD, we've either made the low or any retests of this 3rd drive line, I'd be paying attention to it. In extreme case, maybe 480. Give me a Y if you're with me on my view of the Euro USD. So I just want to take a quick look and see if the Euro Pound is responding. It's responding somewhat. So something else I talked about, if you bought the Euro Pound, you had a good trade. Now we're looking at a higher low, right? We made lower lows in the Euro. Here's your 4-hour. We made new lows in Euro. We made higher lows so far in Euro Pound, which is exactly what I said could happen. I was thinking we were going to hold the 70.10 level. We got down to 70.03, so held that big round number. Even if they got to the dollar and they tried to take it down one more time, I'm a buyer at 69.5. But it's been my view for a while that there's potential for a right shoulder developing. We have an inside week in Euro Pound here. So the most bullish thing the Euro Pound could do is take out this week's lows of 69.90 and then take out this week's highs of 70.80 sometime next week. So we have about a one full day trade, partial day trading in the US on Friday. So I'll be curious to see how we start and come off, but I still believe in something I talked about, and it wasn't just one tune. I was bearish up here and said start to look to get long down here. I didn't think we'd make a new low. So with Euro making a new low, Euro Pound is not. So for now, I still have to go with when I'm constructive Euro Pound. My preferred long on when I think the dollar is going to go down, it's going to be the Euro. And on days I think the dollar is going to recover, my preferred short is going to be cable. Give me a Y if you're with me. So there was a nice call last week on a retrace in the pound and the third drive line that worked again here. So draw these lines in, guys, and you're going to see they're going to be like magnets. So the pound is holding prior lows here at 150. But I'm not impressed with this low here. And actually what had me pretty bearish was this low down here was confirmed. So I still think there might be some unfinished business in pound dollar. But so far we are making a higher low. There's nothing wrong with that. It's just my bias in euro pound that tells me that my preferred long is the euro. And what's a fundamental reason for my preferred long being euro? Here it is. Who's telling you to buy euro? Nobody. Who's talking about higher numbers in the euro? Nobody. All the research that you read right now is how low can the euro go? So what that tells me is that there are more shorts piled into the euro, whereas the pound, up until Carney's meeting, people were much more willing to be long cable than to be long euro because of the entrenched psychological bearishness. So maybe what EG is telling me bottoming here is that you have a lot of people short that are going to be squeezed, and squeezed hard on a move back to 110. So that's my trading psychology reason for preferring the euro. Could turn out to be right, could turn out to be wrong, but my sense of how market participants are positioned in the currencies right now is an overwhelming bearish view in euro, much more bearish than pound, which tells me there are more shorts in the euro than there are in the pound, which means there are more buy stops above the market that will be picked off as we begin a recovery in the euro. Give me a Y if you follow the logic. Okay. So on days I think that the dollar is going to head back up again, the pound most likely would be my preferred short, but since my bias is the dollar is going to correct, I'd rather not try and get bullish the dollar here. Maybe the pound has the potential to rally back to in an ABC type fashion. Call this A, B, C for A, and this is 2 or B. And perhaps we get a rally back to the breakdown back towards 53 one more time. That's my view on pound. Give me a Y if you're with me. Very good. So now move up to US dollar yen. This is a trade that we nailed last Friday right here after the Fed minutes. And when you think about it, the Dixie's making a new high, right? Here we go. So what we're going to do is we're going to look at the dollar pairs and try and diagnose the strength and the weakness of the dollar pairs. So here we are attempting a reversal day in the dollar index right here. So look at these two pictures, and this is a daily. Okay. There's the dollar making new fresh highs, new recovery highs, testing highs from last winter in the Feb March time frame. And let me just go to the daily. Since I'm showing a daily dollar chart, I want to show you a daily yen chart. So here's our dollar chart, making new recovery highs. But what about the yen? Look at that. The yen hasn't taken out its peak. The high this year was back on the 5th of June. Okay? So on the 5th of June, the yen was making a new high, whereas in the dollar index, here we were the 5th of June, here we are making new highs, Look how far away we are from highs in the yen. I'm not saying we can't get another push up. This looks like drive 1, drive 2, maybe we get drive 3 up to here. But look, this is not the first lower high in the yen. This was the first lower high. This is the second lower high. So should there be some type of rally up towards the 24 level again one more time, hurrah, Santa Claus, whatever it is, to me that's a sell signal. But we could also, we don't always have to have 3, and we could just roll down towards 2140 before we get the bounce. But the big picture and the point I'm trying to make is look how strong the dollar has been. Why isn't the yen here? Why isn't it at least here? So dollar making new highs, and the yen hasn't made a new high in 5-6 months. So there's some relative weakness. Okay, now let's go over to another dollar pair. So I view any strength, especially if we get another run at these highs for a third drive, as a selling opportunity. So the next dollar pair I want to look at is going to be USD CAD, which looks like it's probably put in its high on Monday. I thought we'd get one more shot up to clean out the stops. It's still possible. I still view that as selling rallies. But see how much closer USD CAD got to making new highs compared to the dollar. Okay, so CAD a little bit stronger than US dollar yen, wouldn't you say so? So I'm just trying to give rankings. Right now, the yen is the weakest in comparison to the bull move that we have in the dollar. And a little bit more relative strength would be USD CAD, a little stronger than US dollar yen. Everyone see that? And the last dollar pair that I use in comparison would be the Swiss, which the Swiss is much more on target with the dollar making new highs, because so is the Swiss. And I talked about 250 possibly being the target. We're finally getting divergence on the 1 hour. So your strongest US dollar pair is US dollar yen, because it is making new recovery highs for the dollar. In fact, if you look at the two charts, they're almost identical. But I would correlate the Swiss a lot with what's happening in euro, and we did diverge here. It's only our first divergence, so we could make another run. I have a couple of 3 drive lines that still come in a shade higher. Looks like there was some confluence here. So we're getting a reversal day. I would not be long Swiss. I'd be looking for opportunities to short it. And perhaps there's still some follow through to the upside in the dollar. We get a pullback here and we hold 101.5 and still rally up towards 102.70 to have our second divergence setting up in US dollar Swiss. Give me a Y if you're with me. So in terms of relative strength and weakness, your strongest dollar pair is equal to the weakest dollar pair, euro and Swiss. Second relative strength currency would be US dollar CAD, which is not making new highs, which you could correlate to the Aussie, which is not making new lows. And US dollar yen is an animal all in itself and really is lagging dramatically the risk on market activity that we have going on in equities. So if the yen's going to get going, it better get going soon. And I still view any pop up towards 124 as a shorting opportunity in the yen. Give me a Y if you understand the relative strength rankings of the US dollar pairs, and that have been in topping modes for a while, like the yen. and now Canada, and lastly now beginning in US dollar Swiss for a potential high, and now beginning in Euro USD for a potential low. Give me a Y if you're with me. So let's narrow down a little bit on these commodity currencies. So it looks to me, and I talked about this trade down here, buying it at 70.60. It's been a great trade, but now you want to start thinking about coming out of the Aussie here, at least for a little while, maybe a correction. As you can see, we have two drives now in Aussie. Still a little bit too much mo, so we could try a third drive up here. I'm not calling this a huge short for a break to new lows. We're way off the lows in Aussie, and these lows could hold, but I am open to at least a pullback to the breakout, back down towards 71.40, 71, big round number, correcting this advance. So I believe after a third drive move up here, that the Aussie could pull back towards 71. Give me a Y if you're with me. Kiwi, basically the same story. Kiwi's not making new lows. It hasn't made new lows in, God, all the way back here to this September. And I don't think it will. If the dollar surges one more time, maybe we trade 63.90. But just like I made the case of the dollar making new highs and the yen not making new highs and the Canadian not making new highs, you have to give the commodity currencies the benefit of the doubt. They're not making new lows. So if they can't crater Aussie and Kiwi during a period of pretty relentless dollar strength, I asked myself what would happen to Aussie and Kiwi if the dollar weakened. So I view buying pullbacks, should they occur in the Kiwi, as the way to go. May find some trouble up here around 66.5. Aussie looks cleaner to me. We have a third drive setting up, so I would view pullbacks back around 71 as a potential buying opportunity. Give me a Y if you're with me. And moving over to Canada, again, we did diverge. I had this 3 drive line. I drew it in while we were doing our webinar. I thought we had a little bit too much mo, but it was a divergence. Canada looks like it's going to be under pressure, especially if that was a low today in the crude. But I view selling rallies as the way to go in Canada on a weekly basis. We do have a reversal week to the downside, so Canada looking vulnerable. The only thing that threw me is we did not make new highs at 34.34 this week. This high back here was 34.15. So we did make new highs, unless this was it. Yeah, this was it, 34.55. So we did make new highs, but looking like a double top and could be vulnerable to something like this. This was a pretty decent break from 128.30 down in a hurry to, call it 121. So 700 pips from, say, 134 is going to give us 126, 127. So I think this is a viable target in the days and weeks ahead, which would tie in with a pretty good recovery in crude, which most people are now looking for. Give me a Y if you're with me. And start putting Euro Aussie on your radar screen. You know, I said to leave it alone. It looked vulnerable. I said I wanted to take a look at it once we get that low in the euro, but way overdue and beginning to diverge. We could see some type of bear market rally back to 52 in the days and weeks ahead. The guppy, I would like to have the chance to short rallies in the guppy as well, especially since I'm looking for the potential of the pound not being finished. So we'll see if we get some type of fib retracement in the guppy. An area of interest to me would be up here around the 187 level. It stops over the high, looking for eventually a breakdown. In fact, we could even look at the guppy here as a potential head and shoulders formation. Use this as a neckline or a descending triangle. The left shoulder up here at 187.70. So potentially you get some type of right shoulder here, and then the breakdown from the high, call this 84.30, could take us down towards that 180 level, which would be back down towards major support. So looking for potential shorts in the guppy. I want to avoid shorts in euro yen. I said I'm looking for divergence. I have this third drive line in here. It held here and bounced, and we're starting to act okay. So euro yen, because of my view on what's happening in the dollar, the guppy's a preferred short over the euro yen. We could get recovery rallies back towards 133 if I'm right about what's going to happen in the dollar and what's going to happen in the euro in the days and weeks ahead. I'm looking forward to a very interesting December. We'll begin that month and look for monthly reversals in some of the markets that I've been talking about. If you're from the US, happy Thanksgiving to everyone at RoboForex. I'm thankful for our association and glad that I've been able to share my views with you and your clients for the last few years. Good hunting, everybody, and I'll be back with you Monday. The dollar high, the dollar peak is so close. We can not only taste it, but we can see it. Good hunting, everybody. See you next week.